Hello everybody, welcome to another Nomad Hedge market update video. So in today's video I'm going to just establish here where we currently are in the markets and sort of like trying to anticipate where this market could be going. We're going to take a look at the S&P 500. We're also going to take a look at some market breadth, the dollar yields, and also glance over at the crypto markets and take a look at Bitcoin and see where things could be going. So right in front of us we do have the S&P 500, and if we take a look at the massive rally we've had here ever since October 2022, it seems like we're nearing this the end of this upside move. So the way I'm calculating this is using Elliott wave, obviously, and so we can take a look at this thing as a possible impulse here towards the downside ever since the March 2020 low. And since this thing has 5 ways down, we anticipate a corrective move here towards wave B. And then we'll just have to see here if we possibly could make new lows here. Now, this is my primary count of the S&P 500. I do have obviously another count which is super bullish. And I'm not saying this move at all isn't bullish. It's very bullish. But it has some characteristics of a wave B rally. And so we call that, in other terms, sucker rallies, right? But this thing has been going on for quite a long time, and it's been a fantastic move towards the upside. And so if you participate in this market move, congratulations, you've probably made a lot of money. And so we are going to glance over at this monthly chart as well. So just to paint a picture where we currently are. And so we're looking here at this super cycle here. Looks to have ended here, the wave 5. And what's also interesting is that we have a negative divergence here. Let's see if we can get this one straight. There we go. So basically wave 3 here going up to wave 5, we do have a negative divergence. And so that also indicates that this is wave 5 of this larger upside move. Now let's move on here to take a look at how things looking on a daily chart. So you can see here we have a 1, 2, 3, 4, 5. Okay, so this is the cycle that began here in October 2020. So we're looking for waves here. If we could potentially see some, exhaustion here towards the upside. Obviously, I talked about negative divergence here on the weekly chart. So we're seeing the same kind of divergence here towards the upside. So wave 5 here, looking towards this upside move, and we do also have a negative diversion. Now, if this RSI here would move above the highs from, that would be December 2023, then we would basically have to calculate or recount this upside move here. But for now, this is intact. And within this 5-way here, if you take a look at this 5th from the 4th, we do have 1, 2, 3, 4, 5. Okay, so now the market sold off here on Tuesday, rebounded on Wednesday, and I do suspect that this could be, let's see what happened to, okay, I think I possibly removed it. But if we take a look at this, we could possibly, make the case that we're looking for an ABC here. And if we zoom in here to a 4-hour chart, we can see here we also have small waves here leading up to this wave 5. And this would represent wave A. We also got support right on this channel here. So it left an open gap right here. So closing this open gap could finish off this wave B. And obviously wave B could also extend above wave 5. That's a possibility too. So we call that an expanded flat. But in this case, let's just say that we do close this open gap here, and that would mark the end of wave B, so we could anticipate wave C, right? So then we're looking at support right at this wave 4 here. And so then we'll just have to see if this is going to continue downwards, and that would be then an impulse, right? And one way to look at that is to use Fibonacci extension levels and so forth. So we are not yet completed. We have not yet completed wave B, so we can't really project now where wave C is going to end. But this is sort of like the framework that I'm that I've highlighted here, in which I believe the market is going to materialize in. Right. So we're looking for an ABC here, and the same thing could be said. I mean, if you take a look at the dollar, for instance, okay, now it would make sense that the markets would take a breather when the dollar is rising, right? So it's always been this correlation that when the dollar rises, the stock market and the crypto markets takes a breather, okay? So then you see the dollar rising and the market sort of like react in a profit taking session. And so if you take a look at this move here, we have not yet concluded that this is an impulse, but since we broke above the 100% extension here, it looks like we could see a move all the way up here to 105.9, it's almost 106 here on the dollar. So there are some imbalance here. If you take a look at the dollar, for instance, we do have some gaps here. There's an open gap right up here. So the market is going to try to rectify these imbalances at some point in the future. Okay, so the dollar is looking extremely bullish right now. One way to look at that is, we see all the moving average series has basically crossed above the 50-day moving average. We're above the 20, the 200. And so we're riding the 5-day, 5-period SMA here. Okay, so when equities or the dollar in this case is riding the 5 EMA, that's it's a continuation of the uptrend. So as long as this trend here remains intact, we can say that the dollar is in a bullish phase. Okay, so this is the key level to watch here, and if we're solidly above the 168 extension level, then we could potentially see a massive impulse here towards the upside. So let's get a little bit of a perspective here where the dollar is. Now, I do believe that this is part of a larger correction since we concluded wave 5 here. Okay, so we have ended wave A. By the way, this WXY is just an alternative count, but the ones here, you can see the A, B, C, this is my primary count. So you can look at this and say, okay, well, we've concluded wave A here, we've concluded wave B, and now we're looking for a potential, retracement here, and then maybe work towards an impulse here towards wave C. So that's how I believe the dollar is going to play out, based on this Fibonacci count here. Could I make another case? Absolutely, but this is my primary count. And when things start to, when the count starts to change up and the market does something else that I believe is going to happen, then obviously I'm going to change up the count. So I do have different counts outlined, but this is obviously my primary. So let's take a look at the 10-year yield. And the 10-year is, let's see here if we can. It's sort of like the same kind of move here, right? So you had this wave A, B, and then you had, this looks like a flat to me. Okay, so this, you see this, we concluded wave A and then B, and then right at this 100% extension, we sold off here on the yields, but that's not yet confirmed. So the same thing with the yields there is that we could possibly see another leg up here towards the 1.618 extension. That would conclude wave C. Okay, so let's zoom out here and take a look at the weekly chart. And the same thing with the dollar. I anticipate that this is just a corrective move here towards wave B. And look at this trend line here. Okay, so this is a higher low trend line. So we could possibly retest this trend line here and then see a massive drop in yields. Okay, so we're seeing this moving average here as well that could act as support at some point. So this is the 100% extensions, which is the equal length here of wave A. And so if we look at corrections, wave C typically equals the length of wave A. So that's just, we won't be able to know for a fact until we have found resistance here towards the upside. and then we can make some guesses and calculations using Fibonacci tools to project where wave C is going to conclude. So overall, I mean, you know, as yields rise, the dollar rises, we're seeing the markets possibly taking a breather, which is why I believe the S&P has peaked at this point. You know, let's also take a look at the crypto markets. Let's take a look at Bitcoin here. And what we can do actually is take a look at Bitcoin here on, let's see here. I want to show you how Bitcoin fares on a logarithmic chart. Okay. So what's interesting here is that we do have this trend line here going back to 2015, and we tagged it again here in March 2020. That's when the huge bull market started. And then we've just been, you know, correcting here, right? But what happened here back in the summer of 2022 is that we broke this trend line going back to 2015. So what this suggests, right, this looks like an impulse here 5 ways down, is that this whole move is just corrective, right? So we're looking at an ABC here, and so this would be the larger, this would be the primary A, and then we would look at the B here, okay, and this would be the intermediate, and then we could see a possible drop here. Now, I don't, you know, some people like to suggest that the, you know, Bitcoin is going down to 10,000, 5,000. I don't believe that's the case. I just look at this as a corrective move, and possibly, you know, we're looking at maybe 20,000 maximum drop here. I don't want to make any further, or I mean, long-term projections, because that's impossible and stupid in my honest opinion. But, you know, we can sort of like get the picture here of where things are going. So if we're breaking above this trend line here, perhaps maybe retest it and then just fire up from here, then obviously I'm pretty bullish, right? So that's extremely bullish. And so that's precisely what we want Bitcoin to do. But we haven't done that yet. So people like to look at this and say, okay, well, this is a new impulse here. We started, Bitcoin bottomed here in November of 2022. And so now what we're looking at basically is leading up to this fourth halving. And, you know, everybody's been anticipating. We're looking forward to this halving here. The block rewards are going to drop, I don't know, is it 2 or 3? So the supply is going to become very restricted here for Bitcoin. And so we never know. I mean, I don't know exactly, but if this, you know, the last leg up here, you know, if we could look at this and say, okay, maybe it's a confluence zone here. Okay, so this would be the, you know, the pivot. Like what is Bitcoin going to do once we, you know, once we come up to this point that we are now in the halving period. Okay, so could we see a sell-off here, or could we see a, you know, a massive run-up? So, you know, you should never, I mean, even if you think this is a corrective move, you should never be bearish. The reason is that you should always participate. I mean, you should participate in rallies. I love these swing rallies during bear markets, for instance. I mean, they're fast, they're furious, and they, you know, you can make a lot of money participating in these rallies. And so, I mean, this looks perfectly fine here on a log chart, but if we move on to a linear chart or arithmetic, I mean, if you zoom out here and look at Bitcoin and say, okay, well, I mean, look, this thing has corrected, it looks done, it looks finished. And so, and this happened to be, I believe, right at the 0.618 retracement. Let's see if we can, not quite, but, you know, one could, it was the one below it, right? So this thing looks done. I mean, the way this thing has corrected looks done. So either, I mean, I like to always be on the bullish side, so I look at this and say, okay, well, this is the completion here. We have a new grand super cycle here. This thing made its low, and you know, when FTX collapsed, that was the bottom. Okay, that was literally the bottom. But still, I do have to be aware of that this could be a corrective move, right? But either way, I could project this, right? I mean, we've just hit the 1.618 extension, and that is typically the limit. And for where we say that it's perhaps an impulse and not a corrective move. You typically normally see wave C ending up at the 100% extensions, which is the equal length of wave A. But we can make exceptions here and say, okay, well, if it finds resistance at the 1.618, then it's 100% valid still. So if we zoom in here a little bit, we can see here that we are right at this. I don't know. I mean, if you draw a trend line, a horizontal line here, and then draw a high trend line towards the upside here, this seems to be a very strong area of resistance. And so we'll just have to see if Bitcoin can fire things up here and really prove itself, right? We do have the ETF, and hopefully we're seeing more inflows and interest here for the crypto markets and Bitcoin in particular. And I'm looking here at these gaps here. I mean, if I would be an institutional investor, I would definitely want to grab some liquidity out of these areas here. So, we looked at the log chart previously. There's still some room towards the upside, right? I mean, we can look at this again. Right, there's still some room here towards the upside, right there. So if we would tag this trend line here, let's just say that the target is the halving. Okay, so that's $63,700, and that would be, in my opinion, an area where there's a lot of liquidity. And I think that there's a possibility that institutions could keep pushing Bitcoin up here and try to grab this liquidity from retail investors. And then we'll just have to see if this thing's going to take a breather and then, perhaps fire up, and or we're just going to continue higher here, right? I said previously that, I don't think we will ever make new lows here unless there's the Great Depression. Okay, I could make the case, if there is a really 1929, economic depression, yes, I mean, everybody would be out from the market, and that would be a devastating scenario. But if we're looking at a soft landing situation, everything is under control, the lowest I would ever say that Bitcoin is going to drop to, and that would be a healthy correction in my opinion, that would allow the RIAs and new investors to look at this asset class and say, okay, well, now it's a good time to buy. That would be around 20,000 level. Okay, and the reason why I say that, you can look at the Bitcoin futures market here. And so these institutional investors, they're really smart. Okay, so they sometimes leave up marks. They leave traces behind themselves. Whenever they push prices really high, they leave traces. And so what they do is they push the prices so high so they can come back to these levels back again at some point in the future. And so I'm in the camp that all gaps gets filled at some point in the future. It doesn't have to be right away. So we're looking at this gap right here, okay? And this gap here goes from 20,000 all the way up to around 21,000. Okay, so let's just say that Bitcoin finds resistance at this area here. Let's just say it finds resistance here, or maybe at that 63,000 level, and then starts to correct, right? Maybe there's a recession in the in the horizon. The market is starting to pricing in a recession, maybe 6 or 12 months ahead. Okay, so then you could obviously make the case that Bitcoin could start, moving towards a more profit-taking zone. But this is the level I'm looking at. Okay, so this would be a huge buying opportunity if we're ever going to, fall to these levels. So this is something to keep an eye on. Institutions, they always love to, leave some traces here. You can always spot what they're doing. You can use that using volume profiles and open gaps, especially in the futures markets, because they always want to bet on what's going to happen in the future. And so they have a lot of buying powers. They can't really influence the price. And they're really smart people. They look at the economy and the macro and everything, years ahead, and they make decisions based upon that data today. Okay, so that's just a brief here for Bitcoin. Short term, I'm looking at Bitcoin here. Let's go back to let's get back to the daily chart here. And so we've been riding this all the way. This was a great buying opportunity right here. And then this was a little bit choppy here. People didn't know what was going on. And so this was just a huge, beautiful bull market. And so if we zoom in a little bit more here to a 4-hour chart, this is the recent. Let's just give some perspective. This was the ETF. Okay, so this is ETF. So we know where we are. Okay, ETF. We had this correction, and people, sold the. They bought the rumor. They bought the rumor. They sold the news. Okay, that's exactly what happened. And so we have to look at this in the perspective of, the trend line. We're also looking at Bitcoin here using momentum indicators, and we're looking at RSIs. You can see these things are, they're fired up. These things are cooked towards the upside. Look at the monthly chart, the weekly chart. This is the daily chart. Look at the money flow indicator. This thing is just overbought across the board. It's screaming overbought. They have been pushing the price upwards. Now the Arun indicator here indicates that the buyers are still in control, and the sellers have, they've started to show up here on the daily chart. We're seeing here that even intraday, the sellers are having, or the people who are bearish, basically, they're having a hard time trying to regain control. But we're seeing some, the money flow is starting to subside here on the 4-hour chart. We're seeing negative divergences. So that could be an indication that Bitcoin could, we could be looking towards an exhaustion level here. As I mentioned before, I'm not impulsive. I don't believe this is an impulse move until we have broken above some very strong resistance levels, right? So I always look at the the 1.618, for instance. So we broke above this this 1.618, but if we take this into consideration, this is wave A, the first leg of the correction. Obviously, we can look at this and say, well, maybe it's an expanded flat, right? So it would still be an ABC in this case. So, and that would then be, if this is an ABC, then we could look towards a correction, perhaps a flat, right? So we could do something along the line of this, okay? So you have the 100% extension, which equals this leg down here, okay? And you measure it from this point here, around that level, and then you get a target here. So if Bitcoin would actually drop to this level, we could, perhaps look at this thing and say, okay, maybe it's the start of a new cycle, right? This could be a new 1 and 2, right? Or if it continues even lower, then obviously it's an impulse, right? So we're looking towards a more larger correction. So I've been pointing this all out on my Twitter feed, on X, and so we'll look. I got in here. We highlighted this low here, and we got in back here. We sold here. I was in the camp that we would correct here to 1.6 or to the 0.618 retracement, the golden ratio, but this was the invalidation. So we got back right in here in this level here, using stop orders, and then we rode the right here. So we're looking towards selling, and this is. If we zoom in here, we're looking at the 4-hour. Just take a look at this thing on a 1-hour chart. So this is a beautiful classic wave 5 situation here. So you have wave 5 here, and we're seeing some corrective moves here. So we're looking at something along the line of this. Okay. Now, could this wave 5 be, still in progress? It could be a subdivision, right? So we're looking at maybe at 1, 2, 3, 4, something along the line of this. But you can always project where wave 5 is ending using the retracement. This is typically the highest point where wave 5 ends. You can also measure it from the equal length here. But this, you're always using the equal length if wave 3 is extended. Okay, so that's the guideline, I would say. If wave 3 is extended, use the equal length. If it's not extended, use the retracement. And typically it goes up to 1.618, some cases 1.236. So why do I think this is wave 5? Well, I look at some of the divergences here, right? So wave 3, wave 5, I always believe that we need divergences, especially at the end of wave 5 from wave 3. And this is why I think now that we're starting to look into short positions and trying to ride the and make profit here towards the downside. And so we'll just have to see how far the Bitcoin is going down or going up. We still have some targets towards the upside. And so I'm keeping people updated here on X, but obviously to me this looks like the end of wave 5, and we can always get back in. That's the thing, we can always get back in. If we're wrong in our assessment, we always get back in. We're not biased toward one end or the other end. We're just looking at the market and we're looking at the price action and let the market tell us what's happening. Okay. But I showed you all the momentum indicators. We were looking at how overbought everything is. But this market is so driven by institutions, and they've been in this game since 2017. They love to push this thing so much higher. It's not like the equity markets. This thing just keeps on going higher, higher, higher. There's a lot of data available. You can look at liquidations levels, and so the institutions trying to grab all these liquidities. And so they do this with the data that's available. So they'll just keep up pressing and pushing the price higher. There's a failed auction here around this level here. If we go into a intraday chart, but I've highlighted here that there's a failed auction, which means that it's an equal price level. This is an imbalance in the markets. You can see there's a huge fair value gap here, big gaps right here and here. So these are imbalances that the market needs to rectify at some point. So we're looking at the end of this rally here, and so the question that's not been answered so far is that if it's if this is really wave B, right? So we don't know. The only way we will know that is depending on how far this thing retraces whenever we get a correction. Okay, so keep that in mind. Like, corrections are healthy. It attracts new buyers. People are allowed to take profits, and looking for a new buying opportunity. And so the market is always in this nature of trying to rebalance itself. So that's perfectly healthy. So if you missed this rally, if you don't know where to start or where to enter, you can always get back in. The market will allow you to do that. So there's no reason to chase at all. The Bitcoin is going to rally and makes similar moves in the future for sure. So that was a quick update here for Bitcoin. I know this video was a little bit too long, but the S&P looks a little bit peaked in my opinion. We're looking at Bitcoin, the dollar, and the yields, and so these are like bearish signs in my opinion, and and at the same time, it would allow the market to come back a little bit and attract new buyers. So that was it for today's video. If you haven't already, consider subscribing. I know I haven't done a video for a long time. I thought I would just, I think I'll try to make more videos from now on and give you guys perspective. I'm more active on X, so you can follow me on X, and I post charts, and I track a lot of cryptos, stocks, and see where this market could be headed in times ahead. So thank you so much for watching. Hit the like, subscribe, share this to a friend, and I'll see you guys the next time. Take care.